A few days ago, Megalab, a YouTube channel I have never heard before, posted a video claiming that Honey, which is owned by PayPal, has been making some very bad business practices. I'm going to talk about those practices in this video, but I would recommend you watch the full video because the guy goes in full details about it. I don't know if it is true, of course, we don't know. There needs to be an investigation, but many people have tested what has been claimed in this video, and it seems that it is true. That really the whole business of Honey is a scam. It has been scamming influencers and of course, eventually its users. If you hear a news like this, you expect that the market is going to react negatively. But this has not been the case so far since I have recorded the video. My opinion is that Wall Street doesn't really watch YouTube. They get their news on the Financial Times, on the Economist, on Wall Street Journal, but not really YouTube. We will have to wait for this to go a little deeper, maybe an investigation, to know maybe what will be the market's reactions. So far, what we can do is, of course, speculate. I don't know what will happen. I don't know if anything will happen, but if you own PayPal or even if you're following the company like me, I believe we need to understand what's really happening. PayPal acquired Honey in early 2020. And at the time, they paid about $4 billion US. When you look at this figure, it looks big because I was always thinking how Honey actually makes money. If you don't know what Honey is, it's an extension. What it does is that it goes on the internet looking for coupon, for discount codes. Instead of you going on the internet and looking for these manually, Honey claims that they look for the best and give you the best. If you think about it, this is very hard for a company like Honey to make money because the extension is free. How do they actually make money? What they claim, the way they claim to make money is that they have deals with certain merchants, and through these deals, they are going to look for coupon codes. Okay, it makes sense. But now this video from Megalab claims that they have not been really so truthful to the end users. If you expect that if you are going to use Honey, you will get the best deal, it's not the case. Honey is giving the best deal to the merchants, not to you. This is already one red flag. What's worse is that Honey, the way that I learned about Honey eventually was through some YouTubers. They have been promoting the extension on YouTube through influencers, what we call them now. When you first hear about Honey, you are interested in it. It's free, it's saving you money, and big influencers like Mr. Beast are promoting this extension. Why not use Honey? But they have been scamming those same influencers. If let's say you watch a video from your favorite YouTuber, me, and I have a product I'm selling on Amazon. I don't do Amazon affiliate, but let's say I was doing it. And if you click on the link, usually you would expect that some of the money of the purchase you made would go to me. But if let's say you're using Honey, the money actually goes to Honey and not to me. So you may say, okay, maybe it makes a little sense that Honey gets some of the money because they found some coupon for you. But even if they don't find the coupon, as long as the extension is there, Honey is making money, which is a very bad business practice. And I believe the FTC will investigate this. There could also be a class action lawsuit from these big YouTubers because they all have been scammed and these people have a lot of money. They don't like to be scammed and all of them are scammed together. We could expect maybe some class action lawsuit. But what's worse in all of this is that now that we know how really Honey makes money, the whole business is compromised. People won't be using Honey anymore. I don't want to use Honey anymore because I know that it's not the best. I was using Honey expecting that they would give me the best deal, but no, it's not the best deal. It's the best deal for them, not for me. So why should I use Honey? And what's worse is that they are stealing from other people, which I don't like. So I don't want to use Honey anymore. I will remove it from my browser. And PayPal cannot really justify the $4 billion valuation. Of course, when you're buying a company, there's always goodwill. And if you cannot justify this goodwill over the long term, it cannot make you money anymore. You have to impair the goodwill, which will have an effect on the earnings of PayPal. Some people might say this is nothing, it's just a non-cash expense, which is not real. I will agree with these people, but still the reputation here is lost. And I'm not saying that PayPal is guilty of anything. This was done by the past management. And if you will ask me what happened, I don't think they knew really what Honey was doing, how Honey was making money. Maybe the due diligence was not there. And I believe the present management doesn't really know what was happening If they knew and they let it happen, then it's bad. But I don't think they knew anything. I don't think so, because I have been following the company. I don't think the present management was here to scam people. Of course, it doesn't matter what I think. What matters is that really, what's the truth? What happened here? Who's guilty? Who's not guilty? And I'm not qualified enough to do an investigation on this. It's not my job. I'm just here to tell you what happened and how it may potentially affect the stock of PayPal, the whole company, and eventually the stock. The earlier that PayPal addresses this issue, the better it's going to be. It could be something just like the scandal that American Express had in the 1960s, the salad oil scandal. That was one of the best investments of Warren Buffett. It could be like that. It's a subsidiary of the main company, American Express, which doesn't really have anything to do with the main business of American Express, yet the stock price fell by 50%. It could be the same with PayPal. Here, the stock price did not even fall. There's also something else. I'm a little biased. You may say that I don't own PayPal. I owned it for 9 months last year, and then I took profits. I don't own it anymore. So maybe you may say I'm a little biased, that I'm happy I don't own PayPal anymore, and people who own PayPal now, they're not going to make money. I thought about this, and in a way maybe it's true, but I'm not biased towards the company. I don't have anything about the company. I love the company. For me, I sold my share of PayPal because first, it was getting overvalued from my calculation of its intrinsic value. And secondly, it was a small portion of my portfolio, and I preferred to invest in Wise, which was already a bigger portion of my portfolio and was much undervalued, which is a competitor of PayPal. So I would prefer investing in Wise more compared to PayPal. And finally, I did not like the stock-based compensation of PayPal, which was really big. Even though they were buying back shares, they're still buying back shares. It was too big for me. When the stock price got very expensive, that would have cost shareholders a lot. And then share buyback doesn't really mean anything when shares are expensive. I still, however, like the management of PayPal. I said it was a turnaround. It was not just for me, but the backlash that I got from fans of PayPal stock, I don't know why. Some stocks have fans, but the backlash, that was uncalled for. So maybe today, making this video, I'm a little biased. So if you're an investor, you're going to be biased here and there. But you need to see where you are biased and don't let this affect your investment decisions. I told you that I sold PayPal and invested more in Wise, which is now my largest position. I would recommend you watch this video next about Wise. Have a nice day and goodbye.